Okay, so what we're going to be doing is this. We've been looking at various price action concept. So today, our focus is on how do we apply this price action concept. So basically, that's what we're going to be looking. We'll look at how do we make use of candlestick patterns, chart patterns, how do we analyze the trend, how do we do our market structure, how do we apply our support and resistance and our trend line strategies. So I have an example. I have some few examples that I have. Then we'll actually go to the charts so that we can look at we'll then look at what how we can apply this information. So I have a chart here on gold. So when price came here the first time here, we could see that this was a resistance, and then it came the third time. And we had price coming again on that particular area, this one, to mark our resistance. So price was coming on this support and resistance, on this resistance multiple times. So we want to analyze how we can look, how we can what we can apply this information that we've been gathering on support and resistance. So this marks out a support and resistance, and we want to see. So what we can see is that this is only in H4, and gold has been bullish for some time, and price was failing to break this resistance multiple times, and it came again on the third time. So I want you to see what then happened. Then after that, what I want you to focus on is on these lows as price was approaching this resistance. We can see that we had this low, and then price pushed upwards, reached the resistance, and then it dropped. Came again on this one. It didn't go beyond the previous low, and then it pushed again, went to the what? To the resistance. So you're analyzing this. Price is on your resistance, and you're analyzing how price approaches a resistance. So there is this important point that we need to make use of. How price approaches a what? A resistance level matters. How price approaches a resistance level matters. So when price was approaching this resistance, we can see that price was making what we call a breakout build-up. It's like a staircase. It's like price was moving in steps. As price approaches a resistance, it is making this breakout build-up. So you can anticipate what is likely going to take place on a resistance level by just analyzing how price approaches that particular resistance. Okay. Then the next thing, what then happened after this breakout build-up, we see price closing above this resistance. We have a candle, a strong bullish candle that closes above the resistance candle. So there is a mistake that most traders normally make. When this happens, they immediately take a trade. But sometimes this breakout can be a fake out, and you end up thinking that price action doesn't work. So we can see price with a strong bullish candle that closes above the resistance. That's one. So what is this telling us? When price approaches a resistance in this manner, there will be a likelihood of a breakout. But do we immediately take a trade because a candle is closed above the this resistance? We don't. This is trading support and resistance blindly. You need confirmation of the fact that price is going to continue pushing upwards. So the confirmation that I normally want to wait for is a breakout and retest. You see, price was able to break the resistance here, and then it pushes upwards. So trade in most cases, it's all about patiently waiting for confirmation. You see, price then returned back to the resistance. So when a resistance has been broken, you need to wait for price to return back or to make a pullback and come back to make a retest on that broken resistance. So the resistance would turn into a what? Into a support. So we have what we call a trend continuation support and resistance. If you look at this swing low and this swing high, this swing low resulted in the break of this resistance. this swing low and this swing high resulted in the breakout of this resistance. You need to wait because in most cases, price will normally use that resistance as a support. And on this resistance again, you also need to wait for confirmation. The confirmation will come in the form of a candlestick pattern. So you need a bullish pin bar or you need a bullish engulfing candle at this particular level here. So I'm going to zoom in. We're on the H4. So that's another important concept again. You need to look at multiple time frames so that you can get a confirmation on your entries. So your entries, probably you take it from the lower time frame. I was doing my analysis on the H4. So I'll drop down now and come to my H1 and try to identify if I have a signal on my lower time frames. So here we had a shooting star. On the retest, I'm not just going to blindly buy, because price has made a breakout in the what, a pullback. I'll wait for a confirmation. So the signal to go long, price has to be has been rejected to move down. So this shooting star is telling us a story that the sellers which were pushing the price downwards, when it reached this flip zone or this support or this resistance that is now going to be turned into a support, we can see now the presence of what? Buyers stepping into the market and trying to push price upwards. How this bullish pin bar or this bullish pin bar, this was not a shooting star. This was a hammer candle. So it's not a shooting star. This is a hammer candle, which is also called a bullish pin bar. So this now tells us that the price is likely going to what? To reverse and move upwards. So that will be the signal that you'll be waiting for.
Can I ask a question to see? And then this bullish pin bar, which time frame did you find it?
Okay, I was analyzing. If you look here, I was analyzing on the H4. Then I had to go to
Okay.
the what? Go to the H1 to identify um
Okay.
these shooting stars. So you need to go a time frame that is lower than that time frame that you're using for analysis. So maybe probably you're using an H1. You need to go on maybe to M15, 15-minute time frame and get an end. Do you get it?
Oh, yeah.
Okay. Yeah. So this is another scenario, a price action strategy. So basically, what I'm trying to say in all these clips is this: how price approaches a resistance or a support matters. How price approaches a support or resistance matters. You see, price was approaching this resistance in this manner. Uh, this you can anticipate that if price moves like this, there is a possibility that price can break that resistance. So it's not always that the resistance can hold. Sometimes the resistance can be broken. And how can you anticipate that the resistance is likely going to be broken? By just anticipating, by just analyzing how price moves towards that resistance. So this is the first concept. Analyzing how price approaches a resistance matters. Okay, let's look at the next
Okay.
example. So again, we had an example. So in this first part, we'll be just focusing on practical, on theory. Then in the next example, we'll look at the next example, we'll be looking at how we can apply this information. Okay, 1.1, what is there? Okay, we have this chart and we don't see anything here. There is nothing that we can see on this chart. Let's go and see on the next chart. Then if we do our analysis, we can see that here there was a change of character, meaning that price was now moving from a downtrend into an uptrend. And here we have the continuation of the bullish trend as we have a break of structure, as price was able to create a new high, and then price dropped, creating a new high low, and then price pushed upwards and creating a new high. So this is what we can see. So here we had a break of structure as price created a new higher high. And then we had a sharp decline, or we had a sharp drop as price came to this particular low high. So what do we see? Price was able to close below the previous high low at this particular level here. So what does that indicate? It indicates the possibility of price reversing direction, or price moving from an uptrend to a downtrend. So we had a change of character. Why? Because this at this particular level where price, we had a break of structure, and price was supposed to respect the previous high low, but that didn't take place. Price then just dropped, ignored this particular level here. So what, apart from that, we can see that price was moving, was now making higher highs. At the same time, price is also making lower lows. So this is what we call this pattern is like a discord, because in most cases when price is moving smoothly, we should see a series of higher highs and higher lows, or a series of lower lows and lower highs. But this is like a discord. Okay, let's see what then happened. So this is what we call a Quasimodo pattern, where price makes a higher high, at the same time price is making lower lows. So you mark this particular level here, the last candle, this candle here is the one that you mark. This candle, this bullish candle is the one that you mark. Whenever you see price doing that, moving like this, so there will be a possibility that price will push upwards, and this level here, the last candle here that you see on your left here, will act as a resistance. And we call this one the Quasimodo level. So whenever you see price making higher highs and higher lows, go on your left here, on this particular level here, and just mark out your key M level, which is called the Quasimodo level, and wait for price to push upwards and reach this particular level. But another mistake that most people normally make is this: when price has reached this Quasimodo level, they immediately sell, but it's not the correct approach. You need to wait for confirmation. So let's look at the next chart. So eventually price was able to push upwards and reach our Quasimodo level. But we're not going to sell immediately, because there is a possibility that price can just continue to push upwards. When price is returned to your Quasimodo level, you need to wait for a signal, a bearish signal here. So when price now here, when it reached this Quasimodo level, it gave us a signal. That's why I said when we did our first courses, when we're looking at candlestick patterns, it is very important to know candlestick pattern, because those act like your entry triggers. It now tells you, or gives you a signal that you can now sell in this particular market. So when price reached our Quasimodo level, our key M level, we had a bearish engulfing candle. You can see the body of this red candle engulfs the previous bullish candle. So this now becomes your selling signal that there is now a possibility of price moving downwards. So now trading is all about trying to come up with multiple factors that supports your buying or your selling decision. So now we have one, your key M level, your Quasimodo level, and you also have a change of character, which is now signifying that there is a possibility of price dropping downwards, or of price moving from an uptrend to a downtrend. There is a likelihood that price is now going to be bearish. And the third confirmation now comes when you now have this bearish engulfing candle at the key M level. So you can now sell, and your stop loss, you place it just above the KM level. Some people, okay, let's look at how we're going to sell. Just above the what? The KM level, that's where you're going to place your stop loss. And here, after the bearish engulfing, you're going to, on the next candle open, you're going to sell. And look at how price was able to drop and hit this particular level. And your target will be the nearest swing low, which was this particular level here, the recent swing low. And you can see we had a very healthy risk to reward ratio, approximately 1:3 or 1:2.5. So this is how we apply this price action concept. And this KM level will act as a resistance. So trading, it's all about finding factors that supports your buying and your selling decisions. So before we proceed to the next part, I want you to give. I'm gonna give you an opportunity to ask questions. But what we're currently doing is this: we are trying to to apply the knowledge that we gathered on what chart patterns, on candlestick patterns, on support and resistance, or yeah, basically those are the major areas that we'll be focusing. And we're trying to apply this knowledge on what? On real charts. So basically, that's what we are currently doing. So before we proceed to the next part, can you please ask questions? If you don't have, I'll wait for this session to end. Then in the next part, in the next segment, we'll now go to the charts and we'll analyze a particular market. Which asset do you want us to analyze? Shaz, are you still there?
To see.
Yes, yes, yes. Are you still there?
Yes, yes.
Yes. You want us to analyze which? We want to apply one practical application of these price action strategies. Not only these ones, the
Oh,
ones that we've been learning, and want to apply it on a chart and see how this goes.
the thing is, I can't connect. I can't connect to my laptop now,
Mhm.
so it's not. Yeah, it won't be easy
But
to analyze.
okay, it's fine. So I'll just pick any, then we'll analyze and see how this goes.
Okay, cool.
Okay, sure. So I'm gonna end this one and I'll see you in the next meeting.
We're gonna end the meeting now.
Yes, because this one after 45 minutes it will stop. 40 minutes.
Oh,
Zoom you.
okay.
Okay.
All right.